So Joey just finished up a AMA in the Australian community. Nico and Ray, how's your day going?
Yeah,
Pretty
good.
great.
Especially now that we've
busy.
especially now that we've got the veSPA out, so we're excited. There's still more work to do, but at least it's one of the things where we're making good progress. I like the acceleration that we're experiencing, and it's a beautiful day out here. So what's not to complain?
Love that. All right, final warning to invite anyone else that may be missing. We'll get started here in a sec. And just so everyone knows, we do record these. So for any of your friends that may not be able to tune in right now, we will have a recording. We'll post that link on Twitter. So I think we can get started. As always, we'll be doing an introduction. We'll be informing you all as to the recent progress and recent updates that we've had since the last time we spoke. And I'll also just introduce the project as a whole for any potential new listeners or first-time listeners of the recording. So here's the intro. Sperax is a global software development firm, and we build open source financial software, and we deploy it to public blockchains. Our goal is to make DeFi equitable and accessible for all, not just those that maybe are crypto native or are really into the space like us. So our beachhead product is USDs, and it's a stablecoin that produces passive income for anyone that's holding it. So the income is produced from collateral reserves, which we can get into the details in our documentation, but we call this feature auto yield. And it's actually sent to your wallet without having to do any staking, claiming, or anything. So we're trying to design the most user-friendly yield-bearing product in DeFi. And since our protocol launch on January of this year, we've hit some pretty impressive milestones that we're very excited about in just the first 2.5 months of this project. So in the first 2.5 months, since our launch mid-January, we've attracted over 25 million 25 million mints of our stablecoin. So there's a circulating supply of 25 million today. And as everyone knows, there's actually a burning mechanism integrated into our protocol. So as the stablecoin grows, it results in a burning of the governance token, SPA. So that has actually resulted in a net burn of over 10 million SPA so far. So 25 million USDs has caused over 10 million SPA to be burned. And that's over 1.5% of all circulating SPA today. So we're extremely excited about that. And we think it's a great proof of concept for the future of the protocol. As the stablecoin grows in adoption, we can expect significantly more burning to come from the protocol. And we've also launched multiple yield farms, which contributed to the growth, including 2 different stablecoin yield farms that can pay you up to 30% interest, some fixed, some variable. But you can find all of those farms on app.sperax.io. So we try to make it super, super easy, super user-friendly. So we've had some brilliant user experience designers wrap all of these farms right into our own front end. And most recently, why everyone is here is we launched veSPA, which is designed to enable staking generally to reward SPA holders, and also to align incentives. So what we mean by that is we'll actually reward you the longer you stake with more generous rewards, including a better APY. So this actually allows for the long-term incentives of all community members to align and ensure that there's no short-term thinking here, because we're really here to build something for the long term. And in less than 24 hours, we've already had 3 million SPAs locked up for an average of almost 3 years. And now that SPA or veSPA is live, we'll be focusing a lot of our engineering and research efforts on various products and integrations to help grow USDs. And really now we're just extremely excited to focus intimately on the growth of the stablecoin. So that's a very high level kind of introduction of where we are and where we're going as a company and as a protocol. And now I'm going to pass it off to Joey, Nico, and Ray to address any other specific updates, that I might have missed, and maybe is pertaining to, one of your zones of ownership guys. So I'll mute myself and feel free to unmute and take it away.
Hey guys. So yeah, I would like to talk a bit more about the tokenomics of our new staking mechanism and how it will impact the incentives within the Sperax ecosystem. And if time permits, we could maybe discuss some of the future product ideas and partnerships we have in line that will drive demand for USDs. So the key idea of our staking protocol is that it rewards SPA holders in return for taking away some of their liquidity. So effectively, you make SPA a non-transferable token for a short period of time or a longer period of time, and you get various rewards for doing that. The longer the period of time that your SPA is illiquid, the higher the APY you generate. So how do we sustain that APY? We, first of all, subsidize it with some of our own SPA tokens. So a part of the APY is going to be funded from the foundation. We have set the budget at 20 million SPA per year doing that. But the biggest driver of our APY, I expect more than 70% of the total rewards will come from that, is the two other features that support the staking returns. Specifically, whenever a USDS is being minted or redeemed, the protocol collects some fee in the form of USDS. Also, the protocol generates collateral on the yield that backs USDS at the moment on curve. 50% of that yield will go directly to the SPA stakers. But how are we going to do that? We will collect all the USDS generated from minting, redeeming fees, as well as the yield, buy back SPA in the open market, and use those SPA to subsidize staking rewards. So effectively, the higher the TVL of USDS, the more SPA will be bought back every week from the open market. So with the launch of the veSPA protocol, we are effectively launching a weekly buyback program, which size is going to be determined by the TVL on USDS and the yield generated on that TVL. So yeah, I think that way we directly link USDS growth as well as size to the value generating mechanism for SPA. While at the same time we make sure that at periods where SPA price goes down, staking returns will go up, because if SPA price goes down, the same amount of revenue can purchase more SPA. So we end up having a staking mechanism that is counter-cyclical. Effectively, whenever SPA price goes down, the returns to staking SPA will increase, which should further stabilize the price of SPA. So these returns will be funded mostly by revenue and not inflation, and they're going to have that counter-cyclical structure to make sure that when staking matters the most, staking is also the most lucrative. Yeah, I think that was a quick summary. Happy to get into more specifics down the road.
Thanks, Nico. I'm sure we'll get into the weeds a little bit more as these AMA questions come. But Ray, Joey, maybe a little engineering update. If not, we can move to the AMA.
Yeah, absolutely. So, like I said, we're super excited to get the veSPA contract out. It was a big effort. Did a lot of, security is paramount and trust, and that goes with trust. So we want our users to trust us and for doing the best job we possibly can. And so that means that we did a lot of due diligence to making sure that this contract is airtight as possible. Let me just rephrase a little bit the historical timeline of what we did. Over a month ago, we started with the specification. We wrote a document that aligned it. We tried to troubleshoot as many issues as you could on paper, because it's a lot cheaper than when you have to modify code. Then from the specs, we did a spec review. From that, we started the engineering work, and then on parallel, we also did the automation of test cases. So that's going to be a way for us to validate the quality of the code whenever there's a change made. That's super important. And then once the smart contract was ready, we did code reviews basically on a daily basis for the last 3 weeks. And in parallel, we sent out the code base to our auditors for review. They found 3 issues. 2 of them were really minor. And we have published the links, I believe, or will be publishing the link to the audit for your review if you'd like to examine it. But in addition to all of that, we ran through some security fuzzers, and tools to see if any of those automated tools may find any issues that our auditors may have missed. But we did the best that we can possibly do to make sure that the smart contract is secure. It's not going to get hacked. Now, of course, there's no guarantees in life, but we did everything we possibly could to make sure that you can trust us with your funds, and that's super critical. Including my background, so we're always trying to improve to increase our engineering excellence. So we're always looking to improve our processes. I come with 25 years of experience in the software industry as well as security. That's my background, and I used to do auditing, smart auditing for a very large bank. And so hopefully that adds more confidence to our efforts. Joe, do you have anything else you want to add?
I think pretty much it, right? I think you covered very well everything we did. Maybe you can share with us the time we will publish the code to like the average scan and like Etherscan.
Yeah, absolutely. So that's a good point. So one of the things we haven't done yet is to publish the code, right? So that would allow you to examine the source code and check for yourself. You'll trust but verify. And so that will be done in the next couple of days. We have one of our engineers that's going to be doing that. It's a bit of an involved process on Arbitrum, so it'll take a little bit of time, but that's going to happen in the next 2 days. Thank you.
Amazing. Thank you so much, gentlemen. So now we will transition over to the AMA side of things. So I'm actually going to be looking at the text AMA section, so I won't be seeing the audience. If anyone is raising their hand, Joey, Nico, or Ray, please interrupt me so we can invite that individual up on the stage. So anyone in the audience, don't feel like you aren't welcome to join the stage. If you have a live question you would like to ask, just raise your hand and we'll invite you up. So alrighty, first question. What is the APY on staking and how can we calculate that APY? What should people be thinking as they're considering the deposit?
I can try answering this question. I gave an answer on Discord, I think, a while ago as well on that subject. So people have to understand how this APY is being determined, because there are a couple of different factors that will drive the effective return. First of all, it's the SPA we give as a budget that's fixed. We will be giving 20 million SPA per year for staking incentives as of now. On top of that, then, it's going to be all the SPA being bought from the open market, as well from the yield and from the fees. This is something we cannot directly control. The higher the market cap of USDs, the more the yield generated, the more SPA will be purchased in the market. Also, the lower the price of SPA, then the token of SPA that is being purchased, the higher the price of SPA, fewer SPA tokens will be purchased. So there are a couple of variables that we do not have a direct influence over. However, with some reasonable assumptions, people can get an understanding of what type of APY they should be expecting at different lockup horizons until the system matures and we see, what's the final veSPA distribution is going to be. We cannot have the exact numbers, but if any user wants to explore that a bit more in detail, I created an interactive calculator that I shared on the general group of Discord, where people can plug their own assumptions, such as what TVL they expect USDs to have, what price of SPA what's the price of SPA they expect, etc., and what staking rate they expect to have. And given all of those variables, they can get the average APY. And then I have calibrated the veSPA distribution to match either curve or Fracs, so they can get a rough idea how that API will change at different time horizons. After we have done like 2 or 3 yield distribution events, I'll be able to talk with much more confidence on the exact APY and how the APY varies at different horizons. Now, because we're still in the beginning, the calculator is the best way for users to get an estimate of how things would look like. The relationship is simple. The longer you stake your SPA, the more rewards you get. So if I lock one SPA for 4 years, it's the same as locking 4 SPA for 1 year, just to get a rough idea how that would work. But final APY will be determined on some factors that are beyond our control. I expect the long-term APY in the range of 20-25%, but I expect it to be also much, much higher in the early days until the system finds its equilibrium.
Awesome, thank you. Okay, so the next question is, with veSPA finally here, this user would like to know the amount of veSPA that you have. Does it give you more rights to a more lucrative rebase for USDS, or is it the level of voting power? And I can just speak to that very fast. Right now, when you stake, what you are given is your share of the emissions, the SPA emissions that Nico just mentioned, plus the 100% of protocol fees and 50% of the revenue generated from the collateral. So in the future, when the DAO is live and your stake can also be used in the governance process, one of the parameters in which the governors and the stakers will control is the rebase and how that revenue split is determined. So today, it's not going to, you can't do that, but rapidly you will have that feature once the DAO and the governance mechanism is live. So as of now, you can just collect your rewards, but in the future, you will be more of a governor in the system. Another question, same user. I know a little bit about how staking helps the economy, but what exactly does staking help with in terms of securing the Sperax network? It doesn't actually secure it from like an economic or like a proof of stake perspective. What it does is secures the network from basically any sort of error that maybe a sole leader might, or any sort of like censorship from any leader capacity. So this needs to be a community effort. So if one user, for example, like had ultimate decision say, or ultimate say in the protocol, then it wouldn't be a secure ecosystem. So we have to have the staking so the users of the protocol and the community members are actually the governors.
Yeah, to add a quick point, as Alec correctly said, it's a way to ensure that people involved in decision making have their long-term incentives aligned with the protocol. Apart from that, I would like to actually add though a small extra economic detail that is pretty important for the stability mechanism. The staking system will allow SPA to be an asset that can capture value, an asset that can generate a significant amount of yield driven by USDS adoption. So having your governance token, which is also the token that backs the stablecoin algorithmically, having some sort of fundamental value, having some sort of cash flow tied to it, ensures that this token will always have some value. Therefore, it will always be able to protect the algorithmic component of the system. So making sure that SPA is a value with some is an asset with some fundamental value is essential for SPA to be able to back USDs algorithmically, even if it's 5% right now, even if it's 7% right now.
Awesome. Thank you for that clarification. The third question from that same user has to do with what SPA emissions are. So, that was just the budget that is being allocated and guaranteed in the early days, but ultimately that will be eclipsed by the revenue generated from the protocol as the protocol matures. The next question has to do with, why we believe SPA and Sperax, the protocol generally, Sperax USD protocol generally is going to be successful long-term. And I think that the most appropriate way to answer that is just through the rest of the questions in the AMA. So if that question isn't answered by the end, please feel free to come back and ask again. But I hope that we can answer that through the rest of the questions. Okay, next question. Each month, the protocol unlocks nearly 50 million tokens, far more than what are burned. And the entire supply is 5 billion, where today we only have, close to 1 billion circulating. So how can the community avoid being slammed for the next few years?
I can try answering that. It's something we have thought deeply. First of all, it's really important for the user who is asking this question to understand where these tokens are going. So we're really transparent about the vesting schedule we have. All of the team got a 2-year. We're starting pretty much our vesting 2 years from now. So that for the whole team, the vesting has been delayed. Most of the tokens go to the treasury and the foundation. The vast majority to the treasury and a few less towards the foundation. Treasury tokens will be used only after DAO is out. So these are funds that the community will be able to decide how we're going to utilize. So there is no selling pressure from those funds whatsoever. Then there are some funds that the second biggest component of those funds goes to the foundation. These are funds that we use discretionary to bootstrap partnerships. I understand that many people are afraid that if we follow a model where we rent liquidity with SPA emissions, it's going to cause significant selling pressure of SPA, even if SPA is being burned, even if SPA is being bought back from the yield. If we do that by dumping SPA in the market, we're kind of defeating the purpose, and that's a really reasonable concern. We have a solution to that. Specifically, our growth model is going to be a bit different than what many other stablecoins have done. We will be releasing more details in the next few weeks, but I can give a quick overview of a general idea. Effectively, rather than renting liquidity with SPA emissions, will we allow the mint of USDs with the SPA component being subsidized by the foundation in return for that USDs to stay locked within a short period of time or a longer period of time within a liquidity pool. So that way we will be able to grow the circulating supply of USDs while seeding deep liquidity across multiple chains and burn a huge amount of SPA from the foundation. So in the end, if you actually see the monthly SPA unlock, you will see that the vast majority of it will go to DAO and the rest will be used to subsidize USDs minting. Some of our early investors are also receiving some SPA every month, but I can verify that the vast majority of them have not sold a single SPA token.
So a question is around the CertiK and the slow-missed audit reports. So the question is around the potential security concern, which is around the state of decentralization that the protocol is currently in. And the actual question is, have we implemented the multi-sig that we had previously discussed in Medium articles.
I can take this one. Yes, every admin rights are now in multisig. We have 5 different keys. So yeah, so it's a 3 out of 5 multisig. It's a Gnosis multisig. So we already transitioned to this phase, multisig phase.
Brilliant. Thank you, Joey. The next question is the difference between SPA and veSPA. And very simply, veSPA is a representation of your staked SPA, and the veSPA is not transferable. So once you stake it, you get these amazing rewards, but you won't be able to trade it. So that's kind of the trade-off that people are considering as they're staking. So as they turn their SPA to veSPA, you get this amazing APY, you get paid in more SPA, but it's non-transferable for the duration of the lockup. Okay, next question. I understand that veSPA equals more SPA rewards and more voting power. So the question is, how does the Sperax team respond regarding a similar project, but only for profit and the token price becomes worthless? Yeah, we've discussed a lot about this. So we are not advocates of renting liquidity or paying users to use the product. That was the primary motivation behind launching veSPA, so we can better align long-term incentives and we can actually begin distributing rewards. If we must use a traditional yield farming mechanism, we can distribute those rewards in the form of veSPA, to those stakers, so we can reduce the sell pressure that way. But as Nico mentioned previously, we have very novel ways of distributing these incentives in such a way that the user still gets their discount or still gets paid effectively, but it actually reduces all selling pressure of the incentives and instead results in the burning of SPA instead of giving it to the user to sell. So this is not just a way to compensate people and ultimately making the token worthless. It actually aligns longer term incentives to ultimately ensure that the stable or the governance token SPA does capture the value that USDS is creating as more and more people use it and capture the benefits of a decentralized auto-yielding stablecoin. Okay, next question. So can you do online monitoring of important ecosystem indicators? Absolutely. So we have 2 different ways we can do that. So first off, you can do it directly on chain, which we are doing through various subgraphs. And maybe it's worth shedding some light on what those are, maybe not. But we can also do it through the front end, through the website, where we can track redirects, click-throughs, and all of that good information. So absolutely, we're collecting data, and we'll do as much as possible to make at least the on-chain data public, transparent, and available for anyone to build dashboards or frankly to integrate USDS or any key metric into their DApp or into their data aggregator. So most definitely we'll be tracking and making those feeds public. All right, next question. What's the plan for long-term business model for Request? I think that might have been for a different project, but the long-term business model is, we've discussed it pretty deeply. As we prioritize on growth of the stablecoin, the value can be observed through appreciation from the governance token through many different on-chain mechanisms. Okay, next question. Sperax needs adoption in everywhere. Okay, we've already discussed how veSPA can help. Okay, here's a decent question, or sorry, not decent question. This is a great question. What is the reason in which the team has made veSPA non-transferable?
Yeah, so if you look at other voting escrow tokens, they're they're non-transferable. There's no reason to set them up so that they can be like standard ERC20 tokens that they can be traded. That's not the purpose of what voting escrow tokens are for. So we just follow the same model that was originally defined by Curve and that everybody else uses. So that's the reason why.
The economic reasons for why that's a good idea are twofold. First of all, since the veSPA holders are the people who control the protocol, are the people who, whose decisions will impact the protocol, they need to have sufficient skin in the game. And the longer the lock, the more skin in the game they have, therefore the more influence they have. So when it comes to making sure that the protocol has a governing body that has a long-term vision and is looking for the long-term sustainability of the protocol, you need to make sure that that governing body has sufficient skin in the game in the protocol from a long-term perspective. That's what the V model solves when it comes to governance. And you can also think it as a way to incentivize people who choose to make their SPA illiquid. So effectively, these people choose to take SPA out of the circulating supply. And we think that, for you to give up on your liquidity, you should be rewarded. So you should think of staking returns as a premium that the users get for voluntarily taking SPA out of the circulating supply.
Thank you. I see a couple of people are on the stage. Would you like to ask a question?
Yeah, sure. Hello, how are you doing?
Doing great. Thanks for joining us.
Thank you. As I mentioned on the general discussion, I have bought more SPA token on about 60 cents, and I'm really happy for it. But the thing is, there's a few people knows about this, and it's a stable coin, and the liquidity is too low still. So as you know, the crypto influencers have a really good effect on the communities. So how do you get other crypto influencer on this project to get more liquidity? I mean,
So are you talking about SPA or USDS liquidity, first of all?
SPA for first, and next for...
Okay, because USDS liquidity is pretty good right now. You can do $5 million swaps with less than 1% slippage. So when it comes to the USDS front, I think we have pretty good liquidity for a stable coin in decentralized exchanges at the moment. When it comes to SPA liquidity, I agree with you that it could be better. I really hope, that the exposure we got from the FTX listing and that we will get will help towards that. Personally, I'm fundamentally against the idea of paying influencers to seal your project. We want to create a project that can produce value for its users. And we believe that influencers and market participants will slowly take care of it and understand the value in that project. I was working at Terra when Luna was 20 cents, and I stayed there for a really, really long time while Luna was trading way less than $1. Over time, people found out about Terra and realized the value that the protocol offers. If you build something that can generate value, I believe the market participants will eventually find it out. So we don't really support any type of paid advertisement towards influencers for exactly that reason. For me, it's more of a principle.
Yeah, and if you know any influencers that you think, their community would be interested in the products that we build, we believe that organic, kind of through the grapevine communication, is the best way to build this organic grassroots community, which will ultimately make it decentralized and increase our chances of becoming the primary decentralized stablecoin, for the metaverse. So we have to do that organically. We can't be focusing on short-term things. So that's kind of the motivation there as well.
And any influencer or community member can reach out to us. I'm always more than happy to discuss about stablecoin design, crypto in general, our protocol in particular, or any of those topics in detail with whoever is interested. So yeah, we won't be giving money, but I'm more than happy to have discussions with anyone who is interested in influencing our project.
Totally. And, this upcoming bond sale that we're having, for example, we've been talking about this new incentive structure. It's basically going to allow users to purchase stable coins at a significant discount. So now influencers that want to have valuable information for their community members can reach out to us and learn about how these systems work, and we can help them communicate it to their users. So now they help their users make money, and that builds a super engaging audience for that influencer. So, everyone kind of wins in this process without having to even pay anyone. Everyone still gets, their fair share of the growing pie. So, yeah, I hope that answers all the questions.
Yeah, all good. Thank you, man.
Wonderful. Okay, we're going to move on. So this is an interesting question. And Nico, I appreciate you answering so many questions, but I think this is going to be back to you again. So veSPA and SPA are in the same ecosystem as USDS. So the success of both of those assets are pretty contingent on the success of USDS. And this user is concerned about a depegging situation, particularly what just happened over at Neutrino USD, which is on the Waves protocol. Something worth noting for anyone who isn't very familiar with Neutrino USD, it uses a very similar mechanism as UST, where the collateral they accept is the governance token in the protocol. So just with that context, maybe Nico, you can speak to peg stability.
Yeah, Waves actually had a specific growth strategy that let them get a lot of TVL in a short period of time, but was not long-term sustainable because it was risky. I'll briefly explain that strategy, and you will see why that risk does not apply to us. What the protocol did was it would use the governance token Wave as a collateral to mint their stablecoin. They would swap their stablecoin for other stablecoins like Curve and inflate the price of their own governance token, which would then allow them to print even more stablecoins, therefore further inflating the price of their governance token, which would lead to even more minting of stablecoins, etc., which, as long as the price of the governance token goes up, everything works smoothly. But because a lot of their growth was funded via that model, which is effectively a way of putting leverage in the system, as people started dumping Waves, the system depegged because there were not enough use cases or liquidity or even adoption of the stablecoin to reflect the market size that the stablecoin had. The stablecoin had grown so much, mostly because borrowing and lending protocols had allowed them to inflate the price of their governance token artificially. That was why that stablecoin depegged. I do not see Sperax or USDS having any similar risk at the moment.
This question is about borrowing SPA using veSPA in the future. I can speak to that real fast. This idea of using SPA or Sperax assets as collateral is something we're extremely keen on, and we're racing toward both, listing on tier 1 borrowing and lending protocols and building our own custom products. But a very important nuance is that veSPA is non-transferable. So likely this would not apply to veSPA as collateral. But one could easily envision a future where USDS and SPA are eligible collaterals for taking loans in USDS or in SPA. So you could lever up, or you could technically go short if you were crazy enough to want to do that. So yes, but not for veSPA. What is the minimum amount of SPA tokens that users are eligible to stake? And I don't think there is a minimum, correct?
There's no minimum.
Awesome.
But it depends a bit on the fees. So if a user decides to stake on Ethereum, fees can be pretty hefty. So I would suggest all users to check the fees before staking. For smaller amounts of SPA tokens, Arbitrum is definitely the way to go.
So this isn't a question that is here, but it's a question that I think is important to ask, which is, in which ecosystems can users stake their SPA, considering we have it available in a couple?
Yeah, so at the moment, people can stake from both Ethereum and Arbitrum. The APY is going to be identical, so we will be pooling all the rewards and splitting them to the ecosystems depending on the VE power. So we treat all veSPA tokens in a similar way. It makes no difference when it comes to receiving yield or voting if you are on Ethereum or Arbitrum. The only difference is the gas cost. So some users might feel a bit more confident locking their funds long term on Ethereum at a higher gas cost. Some others might want to preserve some of the capital or increase the adoption of the scaling solutions and choose Arbitrum. It's totally up to the user. The only difference is the gas cost. The returns are going to be identical on both networks.
So this user pointed out that, in less than a day, we've already seen 1.3 million SPA locked, and that's actually been updated. So, since this was asked, we already have now 3-point-something million SPA staked, resulting in 9 million veSPA. But anyways, the question is there a way to classify your level to potentially offer more power and governance, or maybe receive more emissions? And there isn't necessarily levels here, but thanks to the veSPA mechanism, depending on how long you lock up, you'll be given some multiple to determine how much veSPA you have, which is also a proxy for how much of the rewards you will be receiving, which is your emissions. And also, it effectively gives you more voting power. So what this means is if you lock up your one SPA for 4 years, you will be deposited 4 veSPA. So that means you're receiving 4 times the emission, and you have 4 times the governance power. So it's a long-winded way of replying, but there's no like formal levels or justification or bands of participation, but there is a proxy, which is the fact that the longer your lockup period, the more rewards, more voting power, and more APY you'll be given. Next question: have we thought about a veSPA war, like curve wars? Maybe. So that is the question. Maybe we could discuss a little bit about a gauge type mechanism that we've been discussing, or I'll just put this up for anyone.
Yeah, so internally there has been some consideration in terms of changing the distribution that USDS yield is being given. So right now it's proportional to how much USDS you hold. There are considerations of changing that. So for instance, we could subsidize a liquidity provision program by giving some extra USDS yield there as a reward. That's something that we could definitely experiment doing in the future, or allow veSPA stakers to decide. For instance, they could vote to get more of the yield themselves. So that right now the share is 50-50. veSPA stakers could decide to get like 70% of the yield, leave 30% yield of the yield to the USDS holders. Or in general, that USDS can go to various different smart contracts, for instance, that again, veSPA stakers would have to decide upon. So in the future, there is going to be complete flexibility when it comes to distributing the yield. And veSPA holders are going to be the ones deciding what's going to happen with that yield. Yeah, I hope that addresses this question.
Awesome, thank you. So the next question is around legal research, not about USDS or SPA, but rather have we done research into using veSPA veSPA. It's very similar to Piaggio, which is the company that makes the Vespa scooter. To be honest, we haven't done too much. I mean, we should maybe run it by a lawyer. What do you think?
veSPA technically is not a token. It's more of an accounting system. Since it's non-transferable, it's not really a token. And also, it's the name of an open source code. Like it's, yeah, I don't see any significant legal risk.
Yeah, we're not like monetizing. We're not using their likelihood for anything. It's describing what's going on under the hood. The VE is the same as, vote escrow is applied everywhere. So we'll run it by a lawyer just, because we should, but thank you for the question. The next one is asking about adding Fracs as a collateral type, particularly because with the launch of the 4 pool, the rewards are going to be very lucrative, and we could accept Fracs and form an alliance with Fracs. What do we think?
Definitely. Adding Fracs and USD as a collateral is on a roadmap. An interesting idea would be to even add the 4 pool LP token as a collateral as well. There are some really interesting opportunities there, and it's in a roadmap to explore them.
Okay, thank you. And this next question is regarding the staking rewards and how one might be able to calculate it. They asked if there's some sort of document or website in which they could simulate rewards with assumptions. Is that something that we will have public for the community?
I think you already shared it on your Twitter, if I'm not wrong, and I already shared the calculator on the general of Discord. Just make a copy, that's it, and plug whatever value you want.
Can users edit key parameters in that document?
They can make a copy of the document and do whatever they want on the copy.
Brilliant. Thank you. Okay, wonderful question. So what are our short-term plans when it comes to USDS multi-chain adoption?
Yeah, I can give a general overview. We have a couple of different strategies. Specifically, we're considering using Wormhole as a potential partner when it comes to having cross-chain communication and bridging. And we also plan to utilize the bond program I and Alec described before as a way to seed liquidity across multiple chains. We are going to be releasing much more detailed information on our strategy in the following weeks.
Thank you. We're very, very excited about that. We think we're going to make a big splash going into these other layer 1 ecosystems. Very, very exciting stuff.
Yeah, just to add on to what you guys were just saying about multi-chain. So multi-chain is a really important strategy for us and something that we're focusing on a lot. Like Nico said, we're exploring different options, but it is going to be something that we are fully committed to. And stay tuned for more updates.
Thank you, sir. This next question is, what problems are Sperax trying to solve to make it easier, crypto easier? And what will happen this year and in the future? So this is a very high level question and we've discussed a lot about it today, but I'll take a quick stab at it. So, we have this general idea and belief that right now, most of the DeFi and crypto activity is happening with a pretty small user base. And this user base is small because decentralized financial applications require both financial and crypto or technology expertise just to interact with. So it makes a lot of these more novice users really intimidated and not interested in playing around in DeFi. So what we want to do is harness the power of interoperability in order to create super user-friendly products at the infrastructure level, but also at the application level. So what I mean by that is, First of all, we've already automated a popular yield farming strategy to enable passive income for stablecoin holders. This was all done at the infrastructure level with smart contracts. So that's one way we're making this, reducing this barrier to entry through the infrastructure level. But we're also doing it at an application and user experience level. So if you go on to app.sperax.io, you'll see tons of different features, including yield farms, swapping, and soon fiat on-ramps. And this is all happening at the front end level, but it's allowing for users to have an experience that they're familiar with, one that could even feel like they're interacting with a regular Web2 website. But on the back end, we have all of the DeFi, crypto, smart contract magic that's actually powering this application. So we just really want to make the user experience as familiar as possible and abstracting away all of the crypto complexities that are currently plaguing the space. So in the future, what that looks like is creating more products that automate more popular trading strategies to increase the auto yield generated for these users. So we'll be doing partnerships, integrations with other DeFi protocols, and building custom applications that users can interact with, that some require partnerships and some might not. And that also includes deployment onto other layer 1 ecosystems, and of course, centralized exchange listings to ensure that anyone in whichever country is able to access these assets, and we can really continue to make DeFi equitable, not just for crypto nerds like us. So that was my rant. If anyone wants to add anything to it, feel free.
I think you covered all the key points.
Right on.
That was a good rant.
Cool.
Awesome.
Can you do online monitoring for the most important ecosystem indicators? Okay, this is a repeat question. I think that is all of the questions here today. So we have 5 more minutes. If there are any other questions that people would like to ask, feel free to drop them in or raise your hand. Come join the stage. So I'll just pause here. And anything for the Sperax team, if you guys want to have any final remarks, floor is open.
Yeah, I'm happy to jump in. Just want to say that we're really excited about what we're doing in our project. We have big ambitions essentially for USDS and SPA. We really want to make this to be as liquid of a stable coin that's available across multi-chain. That's our purpose. And we're accelerating our pace of development to deliver more products for you guys and provide more value for the whole ecosystem. And we're really excited to have Nico on our team. I mean, he's a fantastic economist. He doesn't brag enough about himself, but I'll do it for him. He's always coming up with fantastic ideas for how to make our product better.
Stop this, I'm flashing.
Not to say that our engineering team is also fantastic. We have a really great engineering team that's worked really hard to develop the products that we're working on and making sure that they work really diligently, and I'm really proud of them as well. They're fantastic. So that's it.
Well said. Couldn't agree more. All right. Anything else from the community? If not, we'll be wrapping this. No, it looks like we've answered all of the questions. So thank you so much, Sperax team, and thank you so much, community members. This is something that we look forward to every week, and it's a great opportunity to get to speak with you all. So thank you.
Actually, Alec, before we wrap up, would you like to pick the 3 best questions?
Yes. Thank you for reminding me. I managed to keep forgetting that. Yeah. So
I'll forfeit my right. I liked way too many questions. I cannot pick, so I'll forfeit my right to one of you guys to pick on my behalf.
Okay, Joey and Ray, each
Uh,
pick one.
I don't know, man. They're all great questions. I mean, maybe you can decide for me.
So I wasn't paying attention to all, keeping track of all the questions in my head. So it's a little hard for me this time. I'll say the question about, I don't know which one it was that, I'll paraphrase it as best I can. I think the one about whether our SPA, our VE is transferable. And the question about the veSPA, I thought that was interesting.
I thought that was great too.
Yeah.
Okay, so VE being transferable, 1. 2 is the veSPA and the issue of potentially copyright there. Wonderful. And then I'll pick the third one, and I love the question around the VE-SPA war and thinking into the future around incentive distribution and a potential gauge. I loved that question. So I think those will be the 3 winners of 500 SPA each. Congratulations, y'all.
Have a great day, everyone.
All right. Yeah, thanks, everyone. We'll be in touch with you and have a great day.
Thanks, everyone.